Welcome to the deep dive, where we try and cut through all that noise and get right to the core insights for you.
That's the plan.
So today we're jumping into something really fascinating. E-commerce growth stocks.
Mm.
Our mission, using the sources we've looked at, is basically to find those high-growth companies, the ones that could be genuine, easy wealth builders if you're a long-term investor.
Right.
We want to get past the sort of daily market ups and downs and really understand what drives stock performance over the long haul.
And I think to really get us started, it's worth highlighting a key principle that just keeps coming up in our sources.
Okay.
It's this, well, surprisingly simple strategy for stock market success, actually. It boils down to consistently focusing on companies reporting strong, genuine revenue growth.
Not just short-term spikes, but sustained growth.
Exactly. Not chasing trends, not speculating. It's about a disciplined long-term view.
Yeah.
And if you apply that across a diversified portfolio of these kinds of companies, the potential for outstanding returns over, say, a decade or more is significant.
So the idea for you, listening, is to look beyond the share price wiggles.
Precisely. Focus on how the actual business is expanding. Because over many years, the correlation is incredibly high. Almost a straight line between that business growth and the stock price appreciation.
Okay, let's unpack that a little. It sounds simple, maybe, but there's a lot underneath it. So we're saying filter out the daily news cycle, the market chatter.
Yeah, the noise.
And zoom right in on the business performance, its health, its expansion, this idea that consistent revenue growth is the real engine, the sort of North Star. It's powerful.
It really is.
But why this specific focus? For you, the long-term investor, what makes revenue growth such a critical predictor?
Well, the power is in the mechanics, really. When a company consistently grows its revenue at a good clip, it's a massive signal that the core business is working.
Right, they're doing something right.
They're attracting customers, selling more, maybe breaking into new areas. And what's really insightful, I think, is that this kind of sustained growth often creates a virtuous cycle. More revenue means more money to reinvest, right? Into new ideas, better tech, getting more customers, which then fuels even more revenue.
Okay, so it feeds itself.
Exactly. So by finding these growth engines, you're not just betting on a stock price, you're investing in the actual expanding value of the business itself.
And our sources are basically pointing us towards these kinds of companies.
That's the idea. Find the businesses fundamentally growing their reach and services, because that's what drives value long term.
Got it. Okay, with that foundation laid, let's open our first case file.
Let's do it.
We're heading to a region where e-commerce is absolutely booming, still unfolding, really. A huge market ripe for innovation.
Latin America.
Exactly. Our sources consistently point to one company that's basically building the digital economy there. Massive population, over 650 million people. We're talking MercadoLibre.
A name many will know, for sure.
But what specifically makes MercadoLibre such a standout example of this long-term growth story we're talking about?
Well, one of the really key things about MercadoLibre that our sources dig into is just how multifaceted its business is. It's way more than just an online shop,
Right, it's not just buy stuff online.
Not at all. They've cleverly built these layers of revenue streams on top. They make serious money from mobile payments. That's Mercado Pago, plus advertising, and a whole suite of other fintech services.
So it's like an interconnected web.
Precisely. Right. This diverse ecosystem lets them grab value at different points in the customer's journey. It really strengthens their whole position in Latin America.
And the numbers we've seen, they really back that up, don't they?
Oh, absolutely.
We're looking at revenue growth. Get this. A compound annual rate over 40% for the last 10 years.
Just think about that consistency. 40% a year, compounded.
It's incredible. And that growth sent the stock up, what was it, 2,000% over that same time?
Yeah. A textbook example of that correlation we talked about. Business growth driving stock performance.
And even recently, Q2 2025, revenue hit nearly $6.8 billion. That's up 34% year over year. Still really strong growth.
Very strong.
And just for context on size and efficiency, market cap is around $123 billion and a gross margin of 45.87%.
And that gross margin, 45.87%, is important. It tells you they're converting sales into profit efficiently, even before other operating costs. That's a sign of real strength pricing power.
Definitely. So how do they keep doing it? How does MercadoLibre sustain this kind of high double-digit growth?
Well, our sources show they're really skilled at pulling multiple levers at once. It's not just one thing.
Like what?
Okay, so a recent example, a really strategic one, was reducing shipping and seller fees.
Huh. Reducing fees? Wouldn't that, like, hurt revenue?
Well, you might think so at first glance, but it's a brilliant long-term move. It encourages sellers to lower their prices.
Ah, making the platform more competitive for buyers.
Exactly. And because MercadoLibre already has this massive scale, this dominant position, it helps them grab even more market share.
Okay, that makes sense. Lower prices attract more buyers.
Right. And lower fees for sellers are expected to boost the selection of goods on the site, too. More choice, happier customers. They shop more often. It's that virtuous cycle again.
A cycle that reinforces itself, making it tougher for anyone else to compete.
Precisely. Each positive step makes the whole system stronger.
That marketplace cycle is clearly powerful. But our sources suggest there's more to MercadoLibre's strategy than just the marketplace, right?
Oh, definitely.
It's not just what they sell, but the financial plumbing they've built around it.
Tell us about that other growth engine.
Yeah, you've nailed a really critical point there, the Mercado Pago credit business. This thing is rapidly becoming a huge revenue source.
So lending money.
Essentially, yes. And it's a really attractive long-term opportunity for them to, deepen those customer ties and even bring in new users.
And the growth there is significant.
It's explosive. The company's credit portfolio basically doubled in Q2 compared to the year before. Doubled.
Wow. That shows massive adoption of their credit card product. Huge adoption. And it's not just another credit card. You have to understand the context in Latin America. Access to traditional banking, to credit, it's often limited for millions of people.
So Mercado Pago fills that gap.
Exactly. It steps right in, offering credit, essentially banking the unbanked, giving people vital financial tools they didn't have before.
So it's got a social impact angle, too.
A massive one. And that doubling of the portfolio isn't just a number. It shows profound impact. It drives business growth and creates real social value, all while making customers even more loyal to the whole MercadoLibre ecosystem.
And there's still room to grow.
Enormous room. They only have about 68 million monthly active users right now. In a region that vast, the runway for fintech growth is just huge.
That's a potent mix, commerce plus finance. It creates a platform that's incredibly hard to leave.
Very sticky, very essential.
Okay, let's pivot now. Let's shift our focus eastward. Another e-commerce giant. Our sources say this one has a lot in common with Amazon, strategically speaking, but with its own distinct flavor. We're talking Coupang.
All right, Coupang.
Now, how does Coupang manage to stand out? I mean, it feels like a crowded space globally, doesn't it? Especially with Amazon around. How do they thrive in their main markets?
Yeah, it's true. It does seem like a challenge, doesn't it? For another big e-commerce player to emerge under Amazon's shadow.
Right.
But Coupang has really cleverly carved out its own space. They've basically revolutionized e-commerce in South Korea and now Taiwan by focusing intensely on specific market needs and, frankly, just incredible operational execution.
So they found an edge.
A huge edge. Our sources point to how they've built the ultimate convenience machine, especially for people in these really dense cities.
Convenience how?
We'll get into that.
Right.
But this focus hasn't just cemented them in South Korea. It's showing real promise as they expand. It proves there's still room for leaders, even against the giants, if you execute brilliantly and really understand the local scene.
And the financials certainly seem to back that up. Impressive performance.
Very much so.
Sources show Coupang's trailing 12-month revenue up 62% over the last 3 years, hitting $32 billion.
62% over 3 years? That's significant scale and growth.
And in Q2, quarterly revenue climbed 19% year over year. And importantly, that's on a constant currency basis.
Yeah, that's key. It strips out the currency fluctuations, shows a real underlying business momentum.
And what investors love to see. Profitability is hitting firmly in the right direction. Gross profit, operating income, earnings per share, all up compared to the year before.
Positive trends across the board.
And those strong results, they helped push the stake up 30% year to date. Currently, market cap around $53 billion, gross margin at 29.51%.
Still a solid margin, indicating good operational control.
So what is that edge? How did they achieve this growth? What's their secret sauce?
It really comes down to relentless execution, according to our sources. Their big advantage is this dual focus, rapidly expanding the selection of products.
Okay, more stuff to buy.
While simultaneously pouring investment into automation to dramatically speed up delivery.
Speed. How fast are we talking?
We're talking same-day delivery on a massive range of products for millions of customers packed into these dense cities.
Same day. Wow.
It's not just a nice to have, They've basically created that expectation. It's a logistical masterpiece, honestly.
Yeah.
And it creates this incredibly high barrier for anyone trying to copy them.
Yeah, replicating that speed and efficiency sounds incredibly difficult and expensive.
Exactly. They've set a rocket delivery standard that is just very, very hard to match.
That speed and selection definitely sound like a powerful moat, keeps customers coming back. But is it just about the core e-commerce? Or is Coupang exploring other growth avenues? Our sources mentioned something called developing offerings. What's that about?
Absolutely. That's a really important piece of the puzzle for their future growth. Developing offerings is the category for services beyond just selling physical products.
Like what kind of services?
Think grocery delivery, which is expanding rapidly,
Yeah.
and their streaming entertainment platform.
Okay, so food and movies, basically.
Among other things, yeah. And what's really telling is how fast this part of the business is growing. Revenue here jumped 33% year over year.
33%. That's significantly faster than their main product-selling business.
Significantly faster. And that tells you something important. It shows that customers aren't just buying a product once, they're sticking around, spending more money with Coupang across a wider range of things they need or want daily.
So they're getting deeper engagement.
Exactly. And there's more good news. Management's reporting that these developing offerings are actually growing faster than they expected in Taiwan.
Taiwan, so outside South Korea.
Right, which is a fantastic sign. It suggests their whole high-convenience model, the one they perfected in Korea, can actually work really well in other international markets too.
That implies a repeatable growth formula.
Potentially, yes. It demonstrates this transferable strategy that could mean big future returns for shareholders if they keep executing. Coupang is aiming to be the default app, the one its 24 million active customers just rely on for buying stuff, getting food, watching entertainment, everything.
Okay, bringing these two deep dives together. MercadoLibre crushing it in Latin America, Coupang innovating like crazy in Asia. What's the big takeaway here for someone trying to spot these long-term wealth builders?
Well, if you connect the dots, like you said, both companies perfectly illustrate that core idea we started with.
Consistent high growth.
Consistent high double-digit revenue growth, absolutely.
Yeah.
But it's how they do it that's so instructive, I think.
Okay.
They're not just growing. They're deeply embedded in these huge, expanding regional markets. They're building powerful ecosystems where everything connects.
Like MercadoLibre's finance arm.
Exactly. And crucially, both have multiple ways to keep growing. It's not just one trick.
Multiple levers, as you said earlier.
Right. Whether it's adding vital new services like fintech or streaming, or optimizing the core business like cutting fees to gain share, or achieving unbelievable delivery speeds.
So it's about strategic growth, not just expansion for expansion's sake.
Precisely. These examples aren't just about numbers on a page. They showcase strategic brilliance and operational excellence. They really drive home that initial point. Businesses growing like this, driven by real innovation and smart execution. They can generate significant long-term returns for investors who look past the daily noise.
It's about focusing on that fundamental business performance.
That's the key takeaway.
This has been incredibly insightful, really digging into what makes these specific e-commerce growth stocks potentially so valuable over the long term. Thanks for joining us on this deep dive today.
My pleasure. It's fascinating stuff.
And hopefully valuable for you listening, exploring these core drivers of business growth.
And maybe it leaves you with the question to ponder. As global e-commerce keeps evolving and these platforms get more and more integrated into just, everyday life, what other essential services might these dominant companies layer on next?
Good question. What else could they add to lock customers in even tighter and find new ways to grow revenue?
Exactly. Something for you to think about.
A fantastic thought to leave us with. We definitely encourage you to keep exploring, keep asking questions, and continue your own deep dive into how innovation really creates lasting value. Until next time.